Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Tuesday, and this is the 16th of May, 2017, at about 1:55 p.m. Central Daylight Time. Well, another reversal in the grains, back to the upside, and I'll tell you, there's been life coming into the soybean market. The meal market came alive today as well. Cotton down the permissible limit. So limits up, limits down. It's a wild ride, not for everybody. Only the front month is being impacted quite this way, as the millers have yet to price the product. So first there was a squeeze to the upside. Now the market is in a, I won't call it a free fall because it didn't open limit down or anything like that, but it's certainly reacting negatively, and you can see the drop there. In other markets, we're down a little bit in the crude as the market waits today to see just what we're going to get from the API numbers, which obviously impact everything. We'll be looking at ethanol numbers and so on later as the day goes on. As we're taking a look at the soybean chart, and pretty soon I won't be able to say Maybeans. It'll be off the board, and this will be a weekly chart of the July. But you can see how the market's picking itself up here, and a good, strong close today on the weekly. In terms of an area chart of closes, you're no longer in the down thrust we had. This close is over these highs. So now I can call that an up thrust, 963 being the low, recent low of that. When we go to a chart, a daily chart, you can argue, as I pointed out, that high to this low is the overall range. And everything else in there is sort of waves the market is going back and forth on. You'd have to take out 989 to have traders think that the recent low here might be a more important low than back here. And right now, are you trending? Well, if you define trends the way that most analysts do, and me included in that, a trend is defined as having, in chart action at least, higher highs and higher lows for an uptrend. A downtrend's lower highs, lower lows, and no trend has in some manner a higher high and a lower low. I don't care if the lower low is first, the higher high afterwards, it doesn't matter. It's not a stepping ladder impact. Where this market is fighting a battle, though, is crystal clear. You don't need an awful lot of guidance. It is the 18-day average of closes, what I call the 18-day MAC, moving average of closes. And this seems to be right now the zone that it keeps hitting often, trying to figure out where to go from there. The first resistance to the upside's the upper Bollinger Band at 979 3/4, which isn't very hard to hit. You'll be hitting that tomorrow if you're up just basically another 4 cents. So we'll see what happens. The previous attacks at it have all failed. They have not been able to kick the market higher. They've driven back down at least the two recent ones to the 18-day average of closes. I have no reason to think that this one will follow through in a different manner until it does so. In terms of momentum, what this market at least has going for it, unlike what it had back here, I'll show you. Here's your big upsurge, right? Momentum wasn't picking up there. When we come up to this one, momentum was actually turning down there. At least now you've got momentum turning to the upside. So it could be, I'm not saying it is, but it could be that if the market challenges that and can hang in there, maybe it's the start of something else. I don't know. But what I'm going to guess is that the pros are going to liquidate against that number, as they so often do. In the meal market, you had an outside day up at a very important area. Look at all these lows in this general zone, and again, that happened. Also, momentum is turning with this. So I think until today's low is taken out, you've given a ray of hope to the bulls because you closed over the 18-day average and you've rejected these previous lows. Obviously, where do you think the first resistance point is going to be if it's not the 18-day average, which it closed over? The upper Bollinger Band at 320.80. So if traders are long, I think that'll be the first zone. Should you be able to clear that on a close, maybe you can get up to 328.70 down the road, but first hurdles first. Soybean oil has been the strongest of the pack, and guess what? Today they reversed the spread. They took up the beans, they took up the meal, and they dropped back the oil. And I'm not surprised at the zone where this is all occurring. It's again this Bollinger Band that the market just can't seem to get over and push out of this pattern. Now, it has done a fair job of getting it, widening it, bringing it back, and taking it out like that. But it's not a bullish pattern. It's just a market that's being dragged along for whatever reason. In the corn market, you have had a pattern of lower highs, lower lows, momentum still pointing down. The trend of this market is down. The bias is down because you're under the 18-day average of closes, and you're not oversold. So the bears still control the market until you take out 371 3/4, and should you take that number out, you're still not bullish. Why? You'd end up with a lower low and then a higher high pattern. Bigger resistance point, 374, but I consider fairly formidable still, the 369 1/4 area. In the wheat market, this market is now ahead of itself in being oversold. It is in a downtrend. 3 weeks ago or so, when they had all that wheat damage and they were talking wheat's hurt, it was nothing when it picked up everything other than an opportunity in looking back at the chart where the market got, if you will, not as much damage. It didn't get ahead of itself as people thought, and the world supplies were still too big. You're in a downtrend, resistance 433 3/4. Now, the sugar market's interesting. It closed for the first time since, we got to go way back over here, back into February, over the 18-day average of closes. Another factor. Momentum is pointing up. Another factor. Swing lines, higher lows, higher highs. So unless you take out 1546, this market's in an uptrend now, maybe going back to that 1650 level where I would expect some pretty serious resistance at the upper Bollinger Band. The coffee market's been a son of a gun to try to trade, and I imagine traders are getting their brains blown out trying to trade it. It keeps coming to the 18-day average. It tries to break out to the downside, fails. Tries to break out to the upside, fails. It's one after the other. That's a hard market to trade, and the market has got momentum pointing down and bias down because you're under the 18-day average. You might be able to get back to that 129, let's call it 65 level, and see what the market's made out of. In the cocoa market, ever since you lost the embedded reading back here, this market has been coming up, and guess what? It developed an upside embedded reading today. Now, is the market a buy there? Well, that's up to you, but I certainly can't tell traders to buy into a 100-day average of closes that has held the market in check for a very long period of time, and I'd never tell them to buy over an upper Bollinger Band. I don't see anything to do. It's trendless, basically, in terms of what do you do up here? The trend is up. Don't fight that. You got the higher lows and higher highs with this pattern and the embedded reading. You don't fight it. It's a question, do you join it? There's a big difference there. Now, 2 days up and over the upper Bollinger Band and cotton, and wham, a limit down close. I would not be surprised, I'm not predicting it, I wouldn't be surprised if you go back to the 18-day average and try to figure out what to do. So often that's the posture of a market like that. We really need to see the red line get back under 60 to say momentum is pointing down. In the cattle market, I told you yesterday I am expecting prices to fight at this 18-day average of closes, and that's exactly what I think you're getting right now. Yes, you closed under it by about 65 points, but you're well off the day's lows. It's not far away from it. And the feeder cattle, well, still in a downtrend like the fat. Market's under the 18-day average. The trend is down. Until you get back over 154 1/4 here, you keep the downtrend in play. And in the live cattle under 122.42 1/2. In the hog market, until today's low is taken out, this market just looks solid as can be and could be headed up to the 81.10 area. It's got the embedded reading. It's got the bias. And watch out here. You're able to get this 18-day average doing a crossover of the 100. That's a powerful signal. So when you put it all together, there's plenty going on in the futures markets. And our good friends at Consensus, what they do is they compile newsletters from all over the country. They then make them available for you to read them on their website via a user ID and a password. They then on Tuesdays, and that's why I'm talking about this, take all those newsletters and create from it a bullish, bearish consensus. It's unique to them. It comes right out of the letters. Are they bullish? Are they bearish? What are they doing? If you'd like access to all the letters, and look at all these people that write about this, and this is just part of the list. The list is always changing, and they're bringing in new people over and over and over. Well, and the access, obviously, to the bullish-bearish sentiment index, which has been going on forever here. How do you get it? Call us. Go to our website. You'll see a carousel of free offers. This will be one of them. Click up here if you're watching us on YouTube, or under us on many websites. It'll say, click here for Ira's free offer. Click it, and away you go. Just fill out the form. We'll take it the rest of the way for you. I'm Ira. You have a good day, and I'll see you tomorrow.